Despite the uncertainties faced by Nigerian economy and worsening insecurity, investors at the Nigerian Stock Exchange gained more than 10 billion naira on Monday as the bullish run extended to another week. At the close of business on the trading floor, the equities capitalization increased from 20.47 trillion naira recorded last Friday to 20.57 trillion naira on Monday. As the all-share index rose by 0.04%, the Nigerian stock market took another bearish turn, plunging last week as the bulls ran further downwards. Some analysts say the NSE's all-share indexes will make a bullish recovery before the end of the week. Well, I have joining me now to discuss this and other issues around the market. I have the head of retail investment, Chapel Hill, Tehran, Mr. Ayodiji Ebo. Mr. Ebo, thank you very much for your time. I appreciate this.
Yeah, thanks for having me. Good afternoon.
Yes, so at the exchange, we've seen this dip. First, let's look at what has played out since Monday. And even up to yesterday, it was down. Despite the fact that we've seen some financial results from some quoted companies, nothing seems to be changing. Can you take us through what you've seen and your expectations as we move on?
Okay, thank you. I think if you observe the market, we saw that sentiment became soft when the yields in the fixed income market began to rise, and it's only natural because investors are there for return. So investors began to look at the risk return between both market, fixed income, and the equities market. So we saw that dip, but last week we saw the bullish run, which just showed that we saw a lot of the foreign investors were trying to reinvest the dividend they have received. For now, most of them are not able to take out their funds. And yeah, though the CBN have been supplying gradually, but that made them reinvest their dividend, which spurred the market. So what we're seeing yesterday was peculiar. If you look at it, Dangote Cement was marked down, and they account for a significant part of market cap. So despite the upside that the market would have recorded, if you X Dangote Cement, market would have maybe gained marginally. So, but overall, we expect that sentiment will still remain soft. Market we don't expect any major bullish run in the market. When you look at the fixed income market, yesterday the Nigerian Treasury bills, the primary market auction, closed for the 1 year, closed at 9.75% from 9%. And when you also want to compare that to the expected dividend yield in the market, so it's almost ranking at par. And when you consider the risks in the equities market, so what our expectation is that for equities markets, only investors that have that long-term horizon should be investing now. But if it's for short-term trading purposes, there's a lot of uncertainty in the market. We don't know. We still expect that fixed income yields will still rise, and that would impact on the sentiment or interest of investors in the equities market.
This oversubscription that we see most times in that market. Yesterday, I think the DMO was out, and I think was also oversubscribed. What could you say is responsible? Is it that the confidence is back, or our investors are just chasing quick money?
Yes, I think the first thing we need to notice is the options are limited, and when you look at for the plain vanilla investments, or let's say PFA compliant investment. So typically investment in T-bills, what we see that drives the subscription is based on availability of liquidity. And also we began to even see retail investor or HNIs return to the treasury bills market, because when you look at the rate in January, it was around 1.5% and currently at 9.75%. So we are now seeing that improvement in interest rate. That's why you saw the subscription level, when you look at the bid to cover ratio, was around 1.8%. And what the government eventually did was to they took significant amount, though it was still less than, that was just about 1.5% of what was subscribed or was offered for. So we believe that there's still a bit of a major downside for equities, but like you are saying, for fixed income market is based on availability of liquidity, and the options there are also not significant. Yes, we've been seeing some corporates this year also trying to raise funds, and we know it comes at a premium. So as the way the yields are going, those still significantly lower than the banking lending rates, which would be a major attraction. And what we expect to see is more of long-term borrowings, that's in terms of bonds, because banks hardly give very long-term funds. So we'll see more of bond issuances from corporates this year.
Staying with banking shares now, because many times you say their stocks are very liquid. Yes, and I agree with you that the stocks are liquid. We see some results, like for today, I saw United Capital reporting 67% growth profit after tax, revenue about 3.12 billion naira. We also saw the likes of Fidelity recording 53.9% profit growth of about 10.1 billion naira. The banking sector, we've seen Zenith, we've seen GTB, all of those banks coming with their financial reports. They seem to be doing extremely well, at least better than what we expected. What's responsible for this?
Yes, that's very interesting, and we've noticed over the years that Nigerian banks are very resilient. As you feel that the terrain is becoming challenging, they are always able to walk around in terms of look out for the opportunities despite the challenges. So if you check for most of the banks, you would discover that for most of them, their non-income interest has been the one that has been covering up. Because when you check it in terms of loans, you won't see any major increase within that space, which will impact on the interest income. But if you look at this year too, we've seen that improvement in yield environment. Last year, for most of their funds were also with CBN earning at zero rates, but with the new structure of the special bills, so most of those funds are earning higher interest. So that is also expected to show up the income for most of the banks. And for some of the banks now, they've come to realize that technology is the way to go, and they've been focusing more on driving their businesses based on technology and not just physical expansion, which is also paying off. And as we progress, we'll begin to see that reduction in terms of cost to income ratio. So you see the likes of GTB that were ahead in terms of technology. You will see cost to income ratio about 33%. The next one closest to it is Zenith Bank of about 50%, and for other banks is about 60% cost to income ratio. So we feel that there's a role technology will come to play. For the top tier banks, most of them are also going the old code structure, trying to take advantage of opportunities within the financial services space. Some are going big in asset management, in fintech, and in payment systems. So with that flexibility now, we expect that their revenue will also continue to grow. But when you look at the bank tier 1, tier 2 based on classification, you see the tier 1 bank has continued to dominate the sector in terms of total asset, total deposits. Your profitability is over 70% compared to the tier 2. So they've continued to squeeze the tier 2 banks. Maybe based on economic of scale, they are able to give more loan or withstand a lot of shock compared to the tier 2 bank. But by and large, overall, the banking system, they've always been able to weather the storm, and they've always been able to take advantage of, despite challenges, to identify the silver lining and take advantage of it.
Now, insecurity is the big one. We definitely have to talk about this because it affects everything. Insecurity affects business. That confidence would also be eroded if the country remains unsecured. Now, to you, what do you think specifically? What effects do you see the level of insecurity in the land affecting trading or affecting projections, investments across both spaces, the equities market, fixed income market, and all of that? What effect do you see this having basically on it? Before now, we had a lot in our plate. We had inflation, we had GDP figures, we had COVID-19. I can go on and on. But let's look at insecurity in particular. How does this come to you, Mr. Ebo?
Okay, thanks. I'll look at it from, let's say, 2 or 3 major perspectives. So looking at it from the foreign portfolio investors angle, when they look at our ranking, so when you look at the Global Finance Safety Index, we're around 124 out of 128 countries. And when you look at it in terms of world most peaceful country, we are currently around 143 out of 193. You would see that when they are trying to profile countries they want to invest in terms of perceived risk will be high. So the country premium risk that they would want to put on Nigeria for them coming to invest, that's beyond the insecurity. You also look at you consider some other policy. How is our FX policy? How is the ease of doing business? Those are those things that they will consider before they bring in their funds. And with the increase in the insecurity that in the past few weeks, that is will send further negative signal to the foreign investors. And for us, for Nigeria, we need, especially the foreign direct investors, we need them to come and set up companies. You spoke about that earlier in your first segment. How they need to come and create jobs. So that it's a chicken and egg situation. We need to create the jobs for us to reduce the insecurity, because sometimes you look at it, no matter the amount of money you continue to channel into security and you don't create jobs to occupy these people or occupy Nigerians, then you are really, it won't be as effective as it should be. Also, now looking at it from the perspective of the domestic investors, we look at for domestic investors, once there's insecurity, there's a lot of uncertainty, and you try to choose the type of investment. Some may even be thinking, is it worth investing in Nigeria? Is it worth holding investment in Nigeria? So those are some of the questions they begin to ask once insecurity continue to amplify. And you look at it from the company's perspective. There was a time when the insecurity was heightened then, and when we check the impact on the results. So I looked at the result of Dangote Sugar, for instance, and you look at what proportion the northern area where we feel what in terms of distribution of their goods. So when you look at Dangote Sugar, about 36% of their revenue comes from the north. So if there's any major breakdown, it means that after Lagos, that accounts for 48%. The other 36%, for them to achieve would be very difficult because they won't be able to distribute those goods, and it would impact on the revenue. So once investors expect that there will be that kind of impact, then the interest would reduce, which will now impact on the share price. So insecurity is a major concern, and the cost of insecurity, the economic cost can be very enormous, can be very significant.
Finally, before I let you go, let's look at the commodity space. Gold has been relatively fair when you look at the price. Bitcoin is down 60K, about 53K. What do you make of the commodity space? Just an overview as we wrap up this segment.
So I think in our view, for when you're looking at investments, you are creating a portfolio, but before investors go into any segment in terms of investing, is for you to have set your investment objective and also to understand your risk appetite. So for the gold and even cryptocurrency, though it's currently not allowed in Nigeria, you need to first of all be able to understand how it works. You need a bit of diversification. Most people use it to diversify your portfolio so that you are able to balance out if there are any issue in any part of this sector. So I think for investors, it's a form of diversification. and also use it as a form of hedging because it's also in a foreign currency. So I think by and large, for anyone to consider that, you need to first understand how it works, understand the risks involved, and you also may need to consider what we call your value at risk. If you really don't, you want to try what you feel, if you lose the money, will not set you back significantly.
Yeah, before I let you go, one word. We've talked so much on banking, stocks, other subsectors. Can we, what's the oil and gas space? What's been playing out? Insurance, consumer goods. One word, this as we wrap up. What, any attraction?
Within the oil and gas space, we know last year was a very challenging year for them. When you look at within the upstream space, but we can see crude oil, it's improving now. We saw flat results. We can see that last year, compared to their loss position, they moved to profitability, and they're also going big in terms of gas. And so when you also look at the insurance space, there's still a lot that has to be done. It's going to be policy driven. We'll need, like what we see happening within the PFA space, some form of compulsory insurance scheme that can drive volume within that space, and maybe more education within the health insurance space. And when you look at where we feel that there may be opportunities, the consumer goods space, the industrial goods space, because we know they are easily, for most of them, they're able to pass the costs to the consumer, and that has been helping their profitability. And we feel a lot of them will also take advantage of the capital market to raise funds this year, especially bonds, long-term funds, to support their business and to expand as we expect the economy to grow. So I think by and large, there are still bright spots. It's not all doom, but for equities markets in the short to medium term, it's only for issue for long-term investment. So if you are investing, the market, there's still a lot of value in the market. But if you are a trader, short-term investor, I think you need to also trade with caution and set your stop loss.
Mr. Ayodeji Ebo, he's the head of retail investments, Chapel Hill, Denham. Thank you very much for joining us this afternoon.
Always my pleasure. Thank you for having me.
All right. Enjoy the rest of your day.